area for investment has sort of gained some momentum over the last couple of years. I think it's all around the fact that it became very crowded, and it became sort of a lemming space, so that somebody would start a managed services company. There was a year when there were 3 of us in the world that sort of defined our companies that way. A year and a half later, there were 17 other people that defined their companies that way. And a lot of those guys had gotten venture backing. And so when a space becomes crowded and overheated, then I think it puts pressure on the space in general in terms of exit valuations. But I think to the point that you made, and I appreciate it, and certainly we'll take it. Only time will tell in our case because we're still a young fund. But that's exactly what we're betting on. That with really deep operational expertise and investing principally in the areas that you know really, really well, you can make better decisions. You can help, be very, very helpful to your companies to help make them more successful than potentially if you're more of a generalist. So it's not a space that we're going to abandon at all. It's a space that we're going to continue to invest heavily in, but I think you have to do so with caution.
Maria, what's your time horizon on investments? When do you look to see your portfolio companies pay off?
It's I think you have to be a little more patient, than potentially back in sort of the 98 to 01 time frame. And the way these funds work, or at least certainly the way ours works, is that you have a 10-year time horizon with your investors in terms of when our investors expect us to pay them back. And so, if we can exit companies in the 4 to 7 year range, I think we're pretty happy.
Okay. Dov, you want to take a crack at assessing the overall market for security investments?
Sure. I agree completely with my 2 colleagues here that...
Well, that's no fun.
Okay. The real truth is... no, it's actually interesting though how why I don't want to say security bubble, but there certainly has been some momentum loss in the investment side in the last several years, and I think people are realizing A, there's certainly a factor of overcrowding, and B, the expected returns, but also the idea that selling security and selling those broader secure products, services, technologies is a difficult thing. It's the old analogy of selling insurance and the ability to, in the IT world, in the technology space, it's not often seen as an innovative, helping, enabling of business, but as a protection, as a confinement, as a restriction on business flow. So I think that has a lot to do with, the slowdown and the progress and kind of why people are a little bit limited on jumping into the foray of security in the upcoming years. In terms of the whole thought for us is, again, to focus in on the sector where we have sort of deep roots and deep ties with friends and with colleagues in the industry to help vet those ideas that really make a difference. And so focusing on companies that are not only, yes, bringing security stronger, better, faster, but also enabling things, making life simpler, making connectivity better, and collaboration better overall. And that's kind of what I see the trend moving in the near future.
With Bruce Schneier's talk this morning still rattling around in my head, I can't help but wonder if, Mark, you said that security was a hot investment area during the bust, if there isn't some weird, psychological voodoo at work here, where in downtimes, when we just very generally feel less secure, if investors might be more willing to kind of flock into this field. And then in good times, when we're all just feeling very secure in our general lives, less likely.
I think that's, and I apologize, I actually missed the keynote this morning, so I think it is true. I think psychologically, the money was drawn into the security. The thought was all the money went into protecting after 9/11 and the issues. So no surprise that security companies were hot, and they drew a lot of attention. And everyone said, "Well, if I'm going to spend money, what would I spend it on?" Well, I must spend it on security. I do think it, and I thought Maria brought up an excellent point in that security has one of the advantages in that because of its nature, there's always innovation expected of it. Whether it's coming out of the DEF CON type BlackHat community or others, there's motivation to keep it moving. That you're never, you want to innovate to do new things, and those new things come with risks. And so the security industry has the advantage always of riding along on innovation, not just calamity. So I think that is an opportunity for entrepreneurs, is to look at, sit here and say, what's going to be the thing, whether it's in the consumer field or in the compliance or regulatory field, what's going to be the thing that's bothering people 2.5, 3 years from now, and to say, what can I do to meet up with that? Because that's the market that's going to appear. And that's a lot of what we look for in emerging technologies, is how good is your perspective on that? And what are you really thinking about? Because the market you're shooting for is oftentimes not there yet. And so what are you looking to marry up with? And what's going to drive the spending?
Okay, Patrick, just right off this point, let's say I want to take a step back and go into some venture capital 101 now. As Mark said, you're an entrepreneur, you've read the tea leaves, and you have a good technology. What do you do with it? How do you approach a venture capitalist? What makes a company fundable, and what makes a company, lead you and your colleagues to run in the opposite direction?
Well, we hardly ever run in the opposite direction, because you never. The simple fact is right. What Mark says is right. As venture capitalists, you try to prognosticate on the future, and just like people who do that in the stock market, you never know what's right. It is kind of a random walk. There are some baseline principles, but you just simply never know how industries are going to shape up, and especially in the consumer world, what consumers, who are just so fickle, and millions of them, will want to do or will like as against another one. So I think that the common things that we look for are, number one, the team. I think you'll find a lot of variation amongst the investing philosophies of venture capitalists, but we are a firm that first and foremost values a flexible, smart, humble team who can kind of switch directions on the turn of a dime, and really adapt with changing market circumstances. Second, the plan has to be theoretically possible. We have in our venture firm a Nobel laureate, 1978 in physics, and he makes sure that most of the ideas we fund are theoretically possible. But short of that, I think some of the most interesting investments have been completely off the wall ideas. Things that you just take a look at and think, my God, why would anyone want to use that? And so once again, you kind of revert back to the team. So if you're an entrepreneur in that space, my advice, especially in the consumer internet space, which is so capital efficient, would be to, number one, build as much as you can before you go out to fund. Get as much angel financing, or get as much friends and family as you can, because the earlier you take funding, especially from a large institutional investor, the more of your company you'll give up, and the less your valuation will be. So that's number one. And number two is continuously test the market. So don't hovel up and become a hermit and kind of build your thing in complete isolation. As much as you can, as much as you're able to, do an alpha release. Invite hundreds of your friends to take a look and get that constant feedback. So by the time you approach a venture capitalist, you're already on iteration number 15 instead of number 1, because 15 is going to be a lot better, and it's, in many cases, it's very easy to get there.
Do any of you guys want to weigh in on VC funding 101, and maybe in particular? Are there any pet peeves that you have that entrepreneurs bring to the conference room table?
I certainly agree with much of what Patrick said. Just on the notion of sort of how to think about, kind of your idea and how to turn your idea into a business. Back to the point around valuations and how to drive, ultimately a lot of value into your company. Try to think about what makes you different from the beginning, and try to, protect those differences, for either from an IP perspective or from a methods perspective, as early as you possibly can. Because, again, to the point about how spaces get crowded, if you find yourself solving a really big pain point for a very, very big audience in a unique, differentiated, compelling way, and you've been able to early on carve out some protection, you're not going to have a problem with valuation. You're not going to have the same problems with, sort of confused markets, competition, and valuation. So I think, far too few entrepreneurs, I think, really sort of early on, think about what are we doing that's fundamentally different, and how can we potentially protect that either through a methods patent or technology patent. And getting some good guidance there from good patent attorneys early on, I think, is something that's often overlooked. From a pet peeve perspective, we look at 12 to 15 deals a week, and I'll tell you that, in many of those cases, The presentations, they come in, they know they have 45 minutes to an hour. The presentations are 60 to 80 pages long, right? It's like, we're not going to get through this. Then, it sort of becomes confused. So much better off to come in with, 10 to 15 slides. Don't read them, really bring passion to your idea and be able to engage in an interactive and compelling discussion, rather than sort of drone through, 30 of your 60 and then we run out of time.
Some of the things that we look at is certainly the management team is, for us especially, is first and foremost, good leadership, has industry experience, technical, understands the market, and also open to collaboration. And sort of our nature and how we work, it's a very close niche team with the founders and with the board and the executives of the company. Certainly, on the IP side, protection, through patents or just through obstructions of allowing, barriers to entry for competitors that might enter is important. Addressable market, if there's a not only sort of the enterprise side, but also on the government side, it shouldn't be just solely focused in one area. Also, in terms of a need for the specific product or service, right? If there's a nice to have or if there is a really good to have. The idea around an exit strategy is certainly things people should be aware of. It doesn't necessarily have to be to the nth detail, but just sort of an idea of potential suitors, areas where it could fit in within larger acquiring candidates. Certainly, if they're pilots or referenceable clients, the more the better. I think probably everyone would agree with. And Patrick, you spoke to the maturity of the product. The farther along it is, for us in particular, if it's even late stage alpha or early stage beta, but proof of concept is a little bit difficult, at least for us to add value. And it's probably more of the angel stage. But certainly, the further along, the more number of versions it's been, the more mature the product. All these are kind of factors that filter into us to make a deal more or less appetizing. In terms of a pet peeve, probably hit on Maria. Someone who's well organized and short, brief executive summaries, 1 to 2 pages, kind of spits out what the idea is without too much marketing hyperbole, and especially if it's in the security play. I mean, we all kind of get the market, so if it's talking with us, probably a little less emphasis on what the need is from the market and more of kind of your differentiator.
How many times a day do you hear the word revolutionary?
Quite a bit.
And about half the number of times you hear disruptive.
Right.
Disruptive.
Mark, tell us, how do you approach In-Q-Tel? Can an entrepreneur call you guys, or do you have to wait for the knock on the door in the middle of the night?
There's no knock. In-Q-Tel, I think, is easy to approach. I'm hoping it is. If all else fails, contact me. We have a website you can actually submit through, and we'll see. Maria alluded, actually, it's probably an important thing to realize. In-Q-Tel will see somewhere around 1,300 business plans this year.